working in that chat box so we can get this thing on started here today. Awesome, awesome, awesome. Thank you guys so much. Lot to get to today. Uh, there's a little bit of a fundamental news announcement coming out this week that we might want to prepare for, to say the least. We'll talk a little bit about that. We'll talk some trade setups. Um, We'll talk some fundamentals, of course. We'll kind of explain the impact of the news, but I'm excited to be here tonight. It is 7:01 Sunday, September 14th, and this is that Sunday session for you. Really quick, again, not acting in my capacity as a commodity trading advisor or a licensed financial professional here on this presentation, simply here to show you opportunity. What you do with that opportunity is all up to you, as well as you got to be aware of any and all risk, understand that risk, be willing to accept that risk and take on that risk. And any trades that I show here tonight, if you decide to take those, just know that's of and on your own volition. All right. Um, Let's see. Anybody new here today? Is this your first time being here today? Give me a wire. Yes. Vicky, good to see you. Vicky, it is so funny. I was literally writing you an email. I'm not gonna lie to you. I was writing you an email and I was like, you know what? I think she's still on vacation, so let me just hold off until, Tuesday of this week. But I see you're here. Thanks for showing up here tonight, Vicky. Um, well, I hope it was great for you. Michael, Mark, Phil, let's see. Thank you. Um, that was a cough, actually, just cleared my throat there a little bit. So great to see everybody. Okay, perfect. So since there's no new people, we'll just skip my intro real quickly. First, foremost, in case you're not on the Discord, all right, in case you're not on the Discord, um, join. It is, we are, people are interacting. This is what I love to see, right? My man Stu here, and I gotta find out your real name. So if you're in here, type in a me real quick so I can do that. Here you go, Priyanka. I will send it out. Uh, Everyone, here is the link. It's good for 7 days, so join now. No, I won't create a permanent link because, well, quite honestly, I keep forgetting the permanent link anyway. So, let's see. So, whoever Stu is, right, is he's been sharing like his trades and things like that he's been doing. And there's a gentleman, WM, here who reached out and said, "Hey, this is great stuff. I appreciate that. This is what I'm in, da da da." And then Stu giving his feedback on it. I absolutely love it. This is exactly what I designed this room for. Exactly why I wanted this room created. Exactly what I wanted to happen in this room, to share that information, right? Because I think this is a great way to learn from each other and for us to create a community, right? Now, eventually, yes, I will share, I'm sure, webinars that I'll be in or webinars that Tyson will be in or something like that. This room right now is what, 278 people strong or so. So we will keep this thing rolling, interact, ask questions. Please, please, please do so. That is something I love. Then the other thing is just so you guys are aware, probably starting this week, we're going to be launching a newsletter for me that'll have like daily opportunities, daily what I'm looking at, or sometimes it'll be opportunities. Sometimes if it's like a slow opportunity day, I will be sending out like, hey, these are the fundamental announcements that you need to know about today. Here's how they impact you, right? Tuck in 1 to 2 minute reads or listens very quickly. But it'll just keep us interacting a little bit more, and that'll come out like I said, this week. We will probably launching that. So if you're on the Discord, I'll be sending that out probably several days in a row, just so as many people can register for it will. And then, I'll have you guys start registering for it in the Sunday sessions as well. Special sessions as well. Yeah, you know what? Let's go ahead and do that too. Do I have it up anywhere? No. All right. So, this week I am doing a special webinar Monday at 4 o'clock. It has this special investment session. Is risk-free growth possible? Hint, hint, it is. It's 100% possible. It's something that I've done, seen, and I'm actually doing my dissertation on because I'm in that phase of my journey now. And I know Priyanka can appreciate that phase. She's in one as well. So I'm going to send you guys this link. Okay. This is for this webinar that's coming up. And I'll give you guys a little bit of a preview here of what we're going to be talking about is one, how wealth is created, two, how wealth is passed down, and three, how to fight back on excuse the French, this I almost said the this crap, we'll go crap. This crap right here, right? I mean, look, no one planned for if you bought something for $100 back in 2005, today you have to spend $165 for that. If you literally, if you spent if something cost you $100 in 2020, today it costs you 132. Right? Look at the price of healthcare up 300% since 2000. Look at the price of home values, 350%. Debt, including mortgage, is up 375%, excluding mortgage. If you take out the mortgage, right, and only look at non-mortgage debt per household in the United States, from 1990 to today, it's up 430%. Well, incomes have only gone up 2.6x. That's a damn problem. Not just for my generation, but the next generation and generation after that, right? It is a major problem and issue. And there's a reason why debt or wealth has concentrated itself to the top. And that is because of exactly what I'm going to be sharing with you guys on Monday. Okay. So here's the link again for those that just joined. All right. For those that just joined, there is the link as well. Okay. There is the link for that webinar coming up. There is a big thing that we're going to be talking about. So, let's look at a little bit of last week's announcements. Go ahead and you know what? I'll give you guys a minute to register for that. If you want to go ahead and register, just type in done when you are registered, right? Just type in done when you are registered. And, let's see, did he get in? Let's see. Oops, nope. Let me also do something really quickly while you guys are doing that. Copy link. Let's see. Let's see. And there we go. Perfect. So, perfect. That sends you to the Sunday. No, it should send you to No, no, no. So it says Sunday session, but what it is, it's like I'm just tracking like where, how I sent the link and how people got registered. It's the in session tomorrow, Monday at 4 o'clock. That's what that link does. It should. Let me just check it. Yep. That's for the link Monday at 4 p.m. So there you go. All right, so let's get into last week's announcements really quickly. Talk a little bit about them. So we had PPI come in, right? That's the producer index. And so basically that means that, hey, the production, the price of finished goods has fallen. We were expected an increase, but it actually decreased. Um, inflationary data, inflation still is inflating, okay? Prices are still going up. 0.3%, which was core, is what was expected, and then CPI total is 0.4%. Now, does everybody in here know what CPI is? Yes or no? Does everybody know what CPI is? Yes or no? Let's see. Vicky, yes. Stu, yes. Good. If you don't, it's okay. Right? If you don't know, that's totally fine. Yep, consumer price index. But William, do you know what consumer price index is? Yes or no? Okay, good, good. And the other 49 of y'all, somebody must be holding your hand, has tied your hands behind your back, and you're being held at gunpoint. Surely, it's actually not the Federal Reserve's favorite inflationary data. Um, That is some there are two measures of inflation. One is called the CPI, which is this consumer price index, and PPI is not the favorite either. It is the PCE deflator number, right? PCE deflator is what it's called. PCE deflator number. This is what the Federal Reserve uses in order to understand how much inflation has taken part or has taken place over a given year, month, how a quarter, however they're measuring it, and they want to look at it. But the Fed uses PCE numbers. The market reacts to CPI data. Um, CPI is important to understand because it's the price that we're all paying for whatever decisions that are out of our hands, right? What we're paying from for Nike when they have tariffs, or golf clubs when they have tariffs, or whatever and they have tariffs, right? And how much increase that we're seeing month over month or year over year. Then we have consumer sentiment. Consumer sentiment was down. It was expected at 58.2, which anything under 60 is not a good thing. And it came in at 55.4. Now, what's interesting to me is inflation up here, consumer sentiment down here, CPI flat there, PPI down here, but the market went up for whatever reason. Just an interesting thing that observation, and we'll talk a little bit about that as well. And then for this upcoming week, so fundamental announcements wise, on September 16th, we have retail sales and core retail sales as well. On September 17th, we have the FOMC and speech and rate decision. And then on September 18th, we have unemployment claims as well. Okay, we have unemployment claims as well. And then September 17th, earnings wise, we have General Mills, we have FedEx on the 18th, Lennar on the 18th, and Darden on the 18th as well. So if you want to screenshot that, type in done when you got it screenshotted. Let's see. Wait until 2 million continuing unemployed is Ford. We're not. Hey, I'm not gonna argue with that. Big question is, when is the index base period established for all the inflation figures? Is the base period all the same for PCE, CPI, and PPI? Um, So Ford, that's a great question. So it's different, right? So CPI is typically looked at, and the number they look at there is month over month. There is a year over year CPI, meaning, or I guess August of 2025 to August of 2024. But primarily they look for monthly changes with CPI. Great question, by the way. Same with PPI, but the PCE is typically always a 1 year measurement. Okay. Always a 1 year measurement. Um, so let's talk interest rates because that is going to be the big topic this week. If you want to know what days the market's going to move, I'm telling you right now. All right. 9/16, you'll get a little move. 9/17, you're going to get a Mac Daddy Big Mac move. Okay. We're talking massive market move that day on 9/17, which is Wednesday. 15th is Monday, 16th, Tuesday, Wednesday. Yeah, Wednesday, September 17th. Big market day for you guys, for everybody. Okay. If we look, there is a 96.4% chance that we see a quarter point cut, and the rate will go from 4.5 down to 4.25. Okay. 4.5 down to 4.25. Now, the thing what time? I don't know. Now you're asking too much. 2 o'clock is when the decision comes out. 2:30 is when this press conference is. Okay. Hold on. Why is it, why is it showing that it's off? What? Huh. What in the world? Now, everybody, I need your help. Just make sure I ain't blind, deaf, and dumb over here. That says Eastern time, does it not? And that says 6:21 though, but it's actually 7:17. So, okay, let's refresh. There we go. Now the times are correct. Let me go in here and make sure of the times because I don't want you guys to mistake. Yes, 2 p.m. Eastern, 2:30 Eastern. Okay, 2 p.m. Eastern, 2:30 Eastern. So, no, Jerry, I was just picking on you. So let's talk before we talk if it's priced into the market and our analysis of the market, et cetera, et cetera, et cetera. What I want to first do is talk about lower interest rates and saving them, being the savior to all. Here is the thing. What the purpose of interest rates are is primarily the biggest thing that we need to think about. I'm going to tell you guys, and I'm going to tell you guys something that I truly believe. We won't see a 2 to 2.5% interest rate. We won't see an interest rate with a two in front of it for a while. For a while. Okay. And here is the reason why. So I'll just ask you. All right. You have two investment choices. One, you can buy and it will pay you 5%. The other will pay you 2% return. 5% versus 2%. Would you ever sell
something that's paying you 5% to buy something that's going to pay you 2%? Yes or no? Absolutely not. You'd be You'd be, I'll tell you this, you'd be riding a fine line between dumb and stupid. Between if you were going to sell something, I was paying you five and to get two, right? It wouldn't be the smartest thing moving it wouldn't be your brightest moment. You know what I mean? But here, this is the thing that I wanted to share with you and why I use that example is interest rates, while yes, they're set by the Fed Reserve, they're also kind of set by the globe because the largest holder of US debt is Japan again, because China sold off $240 billion worth of debt of the US's earlier this year. But anyway, the largest holder of debt in the US, in other countries, is Japan. Well, if Japan, when they started buying up debt again a few years ago, when our interest rates were at 5%, would they ever get rid of those bonds to start buying them, selling those in order to get the 5%, the 2% rate? Absolutely not. China wouldn't do it. Russia wouldn't do it. Brazil wouldn't do it. India wouldn't do it. Saudi Arabia won't do it. They're not going to do something like that. It's foolish. So when you think about it, the price of what something isn't worth what you want, it's worth what somebody's willing to pay. And so if no one is going to buy our debt at that lower rate for some time, right? Interest rates will have to they'll basically go like this. They'll fall a little bit and then they'll plateau. And then they'll fall a little bit and then they'll plateau. And then they'll fall a little bit and then they'll plateau, right? And all along here, it'll be like some major event, which is exactly how, we went from 5% to 0% in the first place, right? This was the dot-com bubble at the time. And this was the housing crisis at the time. And then we had a blip up and then a blip back down. And this was COVID at the time, right? So that's what caused us to get down to zero from 3 to 4% in the first place. But we're at 5 now. So we need to get back down into that 3 to 4%, which is where interest rates will thrive for the US because the government's making money, banks are making money, foreign institutions investing in us will be making money. And that's why we need bond rates at a specific area. Okay. So it is so Ford said, "Hey, why did China sell? It needs funding in USD, sell US treasuries for euro dollar market operations." Well, so China sold mainly because of BRICS, honestly. But if you do not pay attention, if there's one, you know what? Let me see if I can find it real quick. Um, there is a YouTube. I'll try to find the YouTube video really quickly for you guys. This is something I think that every person should listen to. Let's see. Diary of a CEO. And this video right here. I think every single person should listen to this at some point in the next couple of days. Every single person should listen to this in the next couple of days. I think this one and one other is something that you are things that you should absolutely listen to. This one. That's Dr. Roman. Hold on. No, I'm not looking for him. Um, this one. Mo. These two videos, I think, are going to be integral for your understanding of markets, the change in world order, the bifurcation that could be happening, and also understanding AI. These are two of probably the best podcasts that I've ever listened to. I listen to this one pretty religiously on most things, but especially these two. Okay, so click on those, save them, bookmark them, and watch them when you can. Let's see. Oh, absolutely. I'm a big Dalio fan. Don't. I'm a very big Ray Dalio fan. I think he's a very intelligent, astute individual. Helps that he played golf. You know what I mean? James, there's two links down there. There should be two. Both are YouTube videos. Um, I'll. Maybe scroll down a little bit. I don't know. There's literally like there they are. You see, one and two. Interesting. Does everybody else have the second or no? Okay. Okay, good. Everybody else has the second. Um, Trying to make sure y'all, have what you need. There you go. Okay, good. The first one, oh, well, that was the second one. There's the first one. All right. Um, Mainly they sold off for bricks. They sold off to buy gold. They sold off for other investments. They sold off for trade, but they don't need as many US dollars anymore because the US and the way we trade is has evolved over the last little bit, and that's really affected us in the market. So, again, I don't see interest rates dropping several points lower. I see two rate cuts this year? No, I don't. I really don't. I get that the markets are trying to put one in there, but I just don't, right? Do I see maybe by like January, kind of March next year having a second rate cut? Yes. I see this quarter point, then it's a wait and see because we still haven't seen the full effect of tariffs and how they've occurred and what's going to happen with those as well. So that's going to be interesting. But there's a few different plays that we'll talk about for the stock market, for the forex market, and the futures market when it comes to interest rates. Okay. For the first one, we'll go forex, right? So if you look at the US dollar, and there's three different versions of the dollar index, right? There's one that's just a basket of Aussie, Europe, pound, and US and JPY. There's one that's like the entire basket, and then there's like the another one that's an equal weighted basket as well. When the when the US does cut interest rates, look for this market to sell off, right? Weaker interest rates equal sell offs in the dollar, equal less return, right? In the dollar. Because what people don't realize, how many of you guys trade the Forex market? Type in a wire yes. Let's see. If you do, you do. If you don't, you don't. Let's see. Got some no's. Let's see, some yeses. Okay, good. So we'll just use this because the Forex market affects all other markets. Because if you go read any 10K from any company, any 10K, you name the company, you pull up their 10K, I guarantee you they cite Forex currency risk as a threat. Okay. Forex currency risk as a threat. And a weaker US dollar may be good for trade, but it's not a great thing to combat inflation. So it's like a catch 22 with that. But we'll see this kind of pull back here and maybe bounce back off. And then if we see another rally, I'm looking for a break here. That's what I'm looking at, right? If we see this left tip, center tip, right tip move is what I'm looking for, right? That's called a king's crown for those that don't know. This is your left tip. This would be your center tip. Your right tip would come, and then we would have the big breakdown of the dollar where we see the dollar drop, right? Not a head and shoulders. A head and shoulders is slightly different from a king's crown, right? Where a head and shoulders just kind of falls back to the neckline. We've actually broken that neckline from this left tip, and we would establish the right tip and then see a fall. As long as we want this right tip to be lower than that center left tip. Now, that means that expect the euro, the pound, the Aussie, the CAD, all other currencies to gain a little bit of strength against the dollar. And that means that dollar weak usually means stock market up, right? So when we see this market come on Wednesday, right? Come Wednesday, when we look at the market, we'll probably see the market rally a little bit, right? Now, do I think it's priced in? Yes. Yes. Priyanka, I see it Wednesday. We'll start the drop, rally up, then the big drop. After that, left tip is in, so probably a couple of weeks to months. Okay. Now, do I think that this is priced in? Absolutely, I do. Do I think that we will see this market fall? Yes, I do. Do I think it falls after Wednesday? Yes, I do. Right. If I look at just regular oldie goldie fibs, right, which have proven their weight from time and time again, we just hit a D extension. We haven't established a new fractal high, but I have a feeling that we will get that fractal high this week. And then I think we see a pullback. If we pull back to 628 from where we are, it wouldn't surprise me, but at least, right? I'm looking for at minimum a pullback in that area between 638 and 646. Right? So what's that? 100 some points down? Nothing crazy, but just kind of reestablishing that. Could it pull as far back as, and I'll use like a purple line here. That, yes, it could. That should be black. My gap that I'm looking at is in here, but could it come back to this level of support and resistance? Absolutely. Right? I still have the bold prediction that we're going to finish slightly up this year. Not as high as we are today, but definitely not as low as we were. Obviously, we're not finishing in the negative, but I do feel that, January of this year, which is right there is where January was. I think we'll finish slightly above that, maybe 2 to 3% this year, right? We need that healthy pullback. Right? We need that healthy pullback. Let's see. Ah, okay. Fantastic. I have a friend doing the exact same there. I think it was like I don't know, 80 some core or something like that, maybe more. I can't remember the conversion. Is it a core is 10,000 US or 100,000 US? Let's see how high we get in the SPY before we pull back. 100,000. So I want to say it was like 10 core is what it was. Okay. So is what he's looking to pull, or sell a real estate deal for. But let's see, how high do we get? I think this is around the high. I really, really think this is around the high. Shirley. I'm not expecting the market to push very much higher before we have some sort of a pullback here. Okay, some sort of pullback. And we need a pullback, right? We know we need a pullback. It is needs to happen. All right. Now, SPY definitely we would see a little bit of a rally, then maybe a pullback. If I were to say, hey, how high could it rally? I think 674, 6,700 to 6,800. Do I think we rise 300 points from from the drop in the market? Eh, uh, that'd be tough. That'd be a tough one to sell to me. I think could we? Yeah, actually, yes. You know what? I could see that. A 300 point rise, absolutely could see that. 300 point rise to a, 400 point fall, absolutely could see that. And that would be within the realm of the market, right? You're talking a 2% swing either way. That's not nothing crazy. That's not a big ordeal. Would still be at all-time highs. But, I still think that there's still some other things looming in the market. Let's see. So let's jump into kind of your stocks for the week. I know somebody asked for Open Door. So I'll write that down. Oracle. So go ahead, type in any ticker symbols you guys want to look at. Ford earning season is ahead. Hey, we're always in earning seasons. You know what I mean? We're always in earning season. I always think it's funny. Like people are always like, "Oh, it's earning season. It's the earning season kickoff." It doesn't end. It just keeps rolling into it, right? CoreWeave, CRWV, AppLovin, Palantir. Where else are we? OKLO, love it. EA, ARM, got two of them. CAD Swiss, UUU, MU, AMD, Google. What else we got? FedEx is pretty big. I don't know. I'm just one of those. It's like BTC, XRP, and ETH. For my crypto traders out there, I'm gonna send you guys something. Um, I'm gonna talk something a little personal here, but so there is the one thing I'll tell you that a doctorate has taught me more than anything else is how to find the real answer to things, okay? And I had a massive, massive issue with crypto. I invested in it fairly early on, made a decent return, and then got out, and then got back in, and then got out, and back in, and back out, right? And I'm back in for a little bit, but I had an issue with like, how in the world are we living in this world today where we can find, a man in the middle of in a hole in the middle of a desert, and yet we couldn't figure out who created this $1 trillion system? I just couldn't buy it, right? I mean, Russia already said, hey, we, the government and the KGB, we created Ethereum. They said it. We know it. It's 100% proven fact. That's who created it. But no one ever claimed Bitcoin, right? The Satoshi Nakamura and, it's just confusing and stuff. So I'm going to send you guys this link. This is an actual paper, right? An actual paper, actual research from this little organization called the National Security Agency of Information Security Research and Technology, the Cryptology Division, and it was published in 1996. Okay. Published back in 1996. Not like, and it's called How to Make a Mint, the Cryptography of Anonymous Electronic Cash. In this article, they talk about SHA 256. They talk about having it being and telling people that, hey, we are going to tell people that it is untraceable electronic payments. And then you scroll down a little bit and it says restoring traceability, propose offline limit to implementations, and how do we take this offline, and here's the formulas, and how to transfer it, and how to send it to people, and what are the security issues, and how do we create wallets, and restoring traceability. And then you start looking at like, okay, well, what papers did this paper cite? Well, how about this Tatsuki Okamoto, written in 94 for the Euro Cryptology division. And then you have all of these individuals who they cite these papers on. So it's an interesting read, to say the least. And I'd share that with you. Not to have you join the Tinfoil Hat Society. I'm not a member, but I just share it with you to say, hey, here's information. Do with it what you like. Okay. That's why I share it. No other reason. So let's get into some of these stocks. I also want to check in on some of the stocks that we talked about last week. So here is Palantir, which is one of the ones that we did talk about last week. Um, you know, uh, I will say this: if you translate Satoshi Nakamura, it is it stands for Central Intelligence in from Japanese to English. So we said sell below 148.26. If there was no break, look for a buy. Okay, so if we go back and we look at this, 148.26. Was there a sell below that? Let's see. Last week. Tuesday, Wednesday, Thursday, Friday the 5th. So it'd be right here. So that was where we were looking at. We said, hey, if it broke this, look for a sell. If it broke this, look for the buy. And we looked for the buy, and well, it was up. It's up to 171 and some change. We still have a blue dot there. It's still rallying. If we look at, you know, the fib tool here of Tyson's, it says pull back for a little bit down to 160. We'll see what Palantir does. I think it's still bulls are still in control. It's not really going too many places there. Let me also load up this indicator as well. And I'm also gonna load up my personal one and system on PLTR. And I'm going to make this one a daily. Oh, no, this one. This one needs to go back to a 1 hour. This needs to go to a daily. So if I look at Palantir, we still have some bullish running on this, bullish volume, bullish volume, bullish volume. This indicator, guys, is something I programmed. I paid to have done. This middle one right here. It's just mine. I haven't released it. I don't know if I'll ever release it, but we'll see. Right? That's this indicator that I just put the pink box around. Poorly drawn parallelogram there. And as you see, right, we have a little bit of bullish run left in this thing. Short term wise, it is showing a little bit of selling opportunity, but long term, this is a buy, and I'm not looking to mess with that. NVDX, that was another one, which was also NVIDIA. So we talked about this last week. If you don't know, NVDX is basically a 2x ETF that is bullish for NVIDIA. Last Friday, we talked about buying this, which ended up, it was at $15.78. It rallied all the way to 17.98. It's at 17.58. That's $2 move there, per share. If you're trading options on it, great. If not, understand. And in order to understand if it's going to keep moving higher, if it's what's it's going to do, we need to look at Nvidia. Nvidia, it says it's not done selling off yet. And I think, you know what? I still think that it's right. I think we will end up, testing one of these lower gaps at like in the 150s or so, right? And it's somewhere in there is where I think Nvidia does end up. But as long as, right, if we break this, and I'll make this chart large really quickly. So one of the things that I've seen on Nvidia's chart that is somewhat cause of, you know, creates a little concern. We have a high, a lower high, and a lower high. And then we have flat lows. Well, if we get equal lows with lower highs, that is technically a wedge pattern that could indicate to us the next explosion up, which is a good thing. So is there a bad time to be in Nvidia? No. But is it a better price? Yes. I think this price right in here, 172 I like. The next price I like in Nvidia is somewhere in here in the 148 to 150 range. Right? If you can build a position in Nvidia or in if you can build a position in Nvidia at anywhere between 148 and 175, I think you're in a great position. Okay. 148, 175. All right. Is where I think you are going to be in a great position. Let's take a look now at UNH. This is my darling opportunity that I've talked about ad infinitum. I've been in this at 300, then back in again at 290, and then in again at 290-ish or so. We are up to, at one point, we were up to like 370 or 362. We're now looking at 352. We had called UNH was a buy and looking to get out at 377.03 at the first run. And then the next run would be 582. Okay. 582. Did anybody take the UNH trade? Yes or no? Anybody take the UNH trade? Yes or no? If you didn't, that's okay. Shame on you. If you did, great. No, I'm joking. Of course. No. So, there could be a small pullback somewhere in the 320 range. And then again, there's a 276 pullback. I don't know when we would see the 276 pullback. I'll be honest with you. That may be after 377. My first term, like, that 377.03 target is a great target, but I think we'll see 368, a little bit of a pullback, then the next rally up. Okay. So if you're going to look to get in again, 320 or 270, somewhere in this range between 320 and 270, this $50 range, if you can get it in there, take a little bit of long-term trade on that. Now I will say my indicator is saying, hey, we're buying, but be steady right now. Time to start looking for your exit. We're buying, but time to start looking for your exit. So on the stochastic RSI, volume still says buy, and that still says buy. But let's check market energy, and we'll get rid of this Wada Atar. We'll add on market energy. Market energy, buyers are leaving it. So if you're in it, you could protect some profits one of two ways. If you're in the stock outright, just move set a take profit, like do something at 340, right? You don't have to give all your profit away. You still made $40 a share here. That's fantastic. And then re-enter in again at a lower price. So that's going to be absolutely fine to do if you so choose. Now let's take a look at Oxy, OXY. So Oxy, we were looking at, let's see, we said buy at 51.84 and we never hit that. Never hit that. So, hey, we never got into the buy on that one. Now this is showing selling opportunity. I'll just say that we're starting to curl over here. RSI still says sell. Sellers are entering in. We got a red dot and we're back at that level. Guys, I mean, to me, this says potential selling opportunity here. Okay? To me, this is potential selling opportunity. All right. So now let's take a look at Open Door. Open Door Technologies, I would be locking in my profit. I'm telling you now. I'd be on the run, my friends, because this is going to head back down to 644. Period. So if you're in it, I'm not going to tell you to get out, but I wouldn't stay in. If you're in it, I'm not telling you to get out, but I wouldn't stay in. You know what I mean? If it were my money and I was in it, I would not be holding past that. All right, we've reached a de-extension. That is your new high. We'll pull back into there before probably rallying to $16. Okay. Before rallying to $16. And so pull back, then rally to 16.31. The problem I have with Open Door, this is what's going to benefit Open Door. When they cut interest rates, even though technically the mortgage rates have already dropped to price in that 0.25% drop, people are going to think that people are just going to run and start buying houses again. Oh my God. Well, the rates are lower. Housing market's going to go crazy. It's probably not going to happen that way. Right? It is more than likely not going to happen that way. We have way too much inventory. We don't have the incomes don't support it, the debt doesn't support it, consumer sentiment doesn't support it, building doesn't support it, migration doesn't support it, right? There is exactly for he said housing is tough because income wages don't support it. Guys, do you know we talked about this actually. To have the same income that somebody was minimum wage would be $126,000 a year right now. Minimum wage would be $126,000 a year right now. That is, it's just amazing to see. It's amazing to understand. So, Open Door, I think people think that once the rate cut happens, so I think Monday, Tuesday it falls, Wednesday, Thursday it begins to rally for those of you guys, okay? Let's take a look at Oracle. Oracle, again, we're coming back down to 244 to fill this gap. Just what's more than likely going to happen. earnings, it was a miss earnings all the way around. Yes, it spiked up based on guidance and future things, but that only gets people excited for a little while, and then profits must be taken. So we'll probably see it come back into this 240 range, but we now know it's high, right? We now know that, hey, we can see this move like this and we can make that next move up. So we'll see this probably come back down and then rally back up. All right, come back down and then rally back up. Let's see. Let's go now to we'll take a look at CAD Swiss really quickly. Uh, CAD Swiss. Again, this is down. It's depressed. There's not a lot of movement to the north on the daily. If I'm looking at that, we did get a little bit of buying energy here. So expect maybe a little bit of pop up, but we don't have the blue dot yet. If we were to look at Tyson's fib tool on that, CAD/CHF in the world. There we go. This is still trying to get it back up into the, up a few. So maybe we get that little push up, but it's going to be very oil dependent. And then when the dollar drops, the cattle gain some strength, and yeah, we'll probably see it pop up a little bit. So that will work. So let's take a look now at UUU, Universal Safety Products. Don't know about them. What do they do? Mm, Smoke alarms, carbon monoxide alarms, related products, including smoke detectors. Da da da. Owings Mills, Maryland. Gotcha. Okay. Well, based on that, I mean, hmm, we have a red dot telling us to sell. Market energy is telling us to sell. RSI is telling me to sell. This is telling me to sell. I think we fill 374 before we see the next movement. I see these big swings in this, and I get it. Very tempting here, to get back into the $30-$40 range, but is it going to? That all depends on building and commercial real estate. All right. William said not. Oh, you wanted 4 U's, not 3 U's? Okay. I think you originally wrote 3 U's. Energy Fuels Incorporated. All right. Ah, uranium mine. Okay. And they're headquartered here. Okay. Gotcha. So, look, mining wise, I'm still all about PPTA. I think price to book ratio and then who owns the company has convinced me of that. But let's take a look here. I mean, I like it. 1648's the target on it. The only thing I'd say is that about time to sell, about time to sell, not selling yet, about time to sell. So we'll call this an X. Three of these are telling me to sell. We don't have a red dot yet either. So if we get a red dot, then I would look for a sell here, but probably just back down into like support and resistance around $10 before we see a rally to 16. Okay. Now, OKLO, 82.71. I mean, we called the buy on that 5 days ago. We said look for the buy there on that was the 5th of September was $69. 69.75 to 1, 2, 3, 4, 5 days ago. It's now 82.71. Anybody take that? Yes or no? Love it. Great. Fantastic. This I would be looking at protecting my profits on. I'm just telling you. If we don't establish a new high soon, I would be looking to protect my profits. Even though this is another rally, I still see like market structure and patterns that are telling me maybe want to hold, maybe think that there's a little bit more of a fall in this. All right. Not a huge one, maybe back down into the $70 range, right? Bouncing between support, resistance, support, resistance range. But I look at that and I see absolutely, we never finished our down cycle in here. We never finished our down cycle there. We haven't finished down cycle there. And that tells me that, hey, probably going to see some sort of fall in here soon, right? Probably going to see some sort of fall in here soon. Let's go to mm, let's take a look at Zoom info. Anybody get into this? Yes or no? I have been talking about Zoom info for a couple of months now. Right? So here we were back in August in the 73 range. It's up about $10. Right? Zoom Info is another good company. I will tell you the reason why I'm looking at not Zoom Info, Zoom Communications. Zoom Info is a totally different company. Zoom Communications. So like what we're on. So one, I know one of the largest um, mental health companies in America has just announced like they're switching over to using Zoom from this other platform. Then you have BetterHelp and a couple others that may be looking to switch as well, just because Zoom does so much more and so much more better than other companies. The other is that there's this pattern, and I've talked about this before, and I know what the pattern is from. It's like company goes public, stock shoots up, your underwriters and certain shareholders are able to sell. They sell. Stock shoots back up because the price looks weak. Your next group of company owners, company people that work at the company, they're able to sell. They sell. Stock sits flat for a while. Then all of a sudden, to the moon, to quote Roaring Kitty, right? To the moon. And we will look, we're in this time right here, right? Now's the time to get in before this thing shoots back up into the $300 mark, right? Zoom is one of those that I would say, look, now is time to get in. Am I looking at well, Ron, the reason why it skyrocketed during COVID was it also coincided with its when they went public. They went public in April of 2019. I mean, it's like it almost was predicted. No, I'm joking. I'm joking. I'm joking, right? I'm not saying that it was, something crazy. I am just saying that it's just amazing timing that Zoom went public in April of 2019. Fast forward to November, December 2019 when COVID was ramping up, and you can just see what happened, right? So, this is where I think that we'll see. I think Zoom will get back into the $200-300 range easily. I honestly see no resistance to get back up to there. So this is one of those companies that if you want to hold on to for a little while, and make a nice chunk of change. And what you do is just, you continue to build the position, right? You start off with a few shares, and then if it pulls back, you buy a few more shares. If it pulls, uh, goes higher, you buy a few more shares, pulls back a few more, pulls back a few more, and you're good. Once you have like, I don't know, 10, 20 shares, when that triples in price, you're a happy camper to say the least. We will look at now Bitcoins, all of them, all of them. So, Bitcoin, we called support and resistance on Bitcoin. We said, hey, there'd be a buy. We could see the market falling down to here. Bam, it fell down to there, pulled back. Will we see it fall back to 105? I don't know. Um, I still see a little bit of bullish movement in this, back up into this. I think we're going to end up playing between like 117 and 105 for a while. That's going to be the new kind of consolidation range. You see, if you notice, right, Bitcoin always goes through these periods of consolidation, consolidation, consolidation. Then you have breakout, breakout, breakout. I think we're going to be in that consolidation range right in here just for a little while, just for a little while, right? I think that is uh a great range on that. On Bitcoin, then let's see. What was there another one that I wanted to look at with you guys? We Walmart was a trade that we took a while ago, and it's now hit our profit targets. Tesla, I think Tesla would be an interesting one because we're seeing Tesla, it's back up 395 from where we were. Right? It's Tesla's just the little engine that could. You see what I did there? You see what I did, guys? You catch that joke? The little engine that could? No, I'm joking. But we've basically, I think Tesla has like $5 more before we pull back down again and then see the next and but we have something here is telling me that there's going to be a little bit of selling here. I think car companies are going to be have lower than expected sales next earnings report. I think a lot of companies' earnings will be shifting in the next little bit. The next one, PPTA, and this will be our last one because I am 8 minutes late for another meeting. Look, PPTA is about to give us our next buying opportunity. Where do we think she is going? Mhm. If it gets down at to 1485, I love it there. I absolutely love it. Anything 1619 to 1485, I think is an optimal entry point on this, and I would be looking for a buy there, absolutely without a doubt. And I'll give it one more check here. This has it. Yeah, this still shows selling off. This still shows selling off. I would not be buying it now. I would be looking somewhere into that 14.85 realm. Right, 15 to $14 is where I'd be looking to buy this thing at, and that's where I would suggest you all. So, let's see. If you can, Jerry, hold on one second. Don't go anywhere. I'll just send them to you now. So what I'm gonna do first and foremost, let's see. There is the Zoom. Here is the Zoom link, guys, for Monday when I'm gonna be sharing that as well. I'm clicking on that link in front of you. There you go. It shows that date and time. You just click there and you'll be good to go. And then here is the YouTube links as well. I'm gonna send those back out to everybody. These are the two videos that I sent to everybody else. Um, oh, maybe not. You know what? I'll put the videos on Discord. So join in on the Discord and I'll update those videos there. But excited for everybody. Thank you all for joining, and I will look forward to seeing you guys very, very soon. Have a good one, and awesome, Vicky. Looking forward to it. Uh, Jerry, Discord is a like chatting tool for groups and organizations. It's like a better version of Telegram. So I'll put those all links on there as well. So looking forward to it, guys. Have a good one. Bye for now.